One of the biggest mistakes retirees make, it's thinking they can stop growing their money. But here's the deal. Retirement is not a finish line. It's a 20-year journey, maybe even 30 years, right? With people living longer now. And that means your portfolio needs two engines. Income through vehicles like dividend stocks. Bonds will also serve the purpose. But there's another one. Growth. Okay, let's start with income. In retirement, you're no longer earning that paycheck, right? So your investments need to take over. Dividend stocks, bonds, annuities, ETFs, maybe you've got some mutual funds in there. All of these can help generate a reliable income stream to cover your day-to-day expenses. The goal is to reduce the need to sell your assets when the market is in a downturn, because that can seriously damage your long-term finances. But do not make the common mistake of going too conservative. That's why we're going to talk about this right here. You know, back in the day, there was a thing called the widows and orphans portfolio, ultra conservative, built upon dividend stocks, treasuries, savings accounts. That doesn't fly today, though, folks, and here's why. First, inflation. Even mild inflation over a 20 or 30-year retirement can chip away at your purchasing power, and we are all acutely aware of inflation these days. What feels safe today, though, might leave you short tomorrow. Second, low yields. Treasuries and savings accounts, they're not what they used to be. In the 1980s, the 10-year treasury yielded 8 to 10%. Today, 2025, yields are hovering around 4 to 5%, in that range. And if interest rates drop again, those yields will likely fall even further. Meanwhile, inflation may not drop at the same pace. It could remain stubborn. And that means you're earning a negative real return, losing purchasing power year after year after year. Nobody wants that. So hiding in savings because you think it's safe really is not that safe at all. I've seen that mistake many times. Don't be the one to make that mistake, okay? The third thing, longevity risk. Today's retirees often live well into their 80s, 90s, even beyond, right? So if your portfolio is too conservative, it may not last as long as you do. And you're running out of money, that's a much bigger risk than a little market volatility, which is the thing everybody tends to freak out about, right? So that's where this thing here, growth, comes in. Even in retirement, you still need exposure to growth stocks or growth-oriented ETFs or mutual funds, because you're not just investing for this year, you're investing for your 80s, maybe even into your 90s. So, how do you balance these needs for income and growth in retirement? Now, one popular approach is called the bucket strategy. Bucket 1, cash and short-term bonds. That covers up to 5 years of expenses. This is the money you can't afford to risk. It's not the cash you go to Vegas and spend, okay? Bucket 2, dividend-paying stocks and intermediate-term bonds. This bucket is designed to fund the next 5 to 15 years. Then finally, you've got bucket 3, and you guessed it, growth assets, like stock funds, to support the later years of retirement. This way, you've got your bills covered now while you are still growing wealth behind the scenes. And your growth stocks, which are more volatile historically, they have more time to, what do? Grow and be there for your income needs when that time comes around. Hey, if you want more ETF tips for your retirement portfolio, here's my free guide to ETF income generation. Now, the idea here is to build a strong, diversified retirement portfolio with the right inputs, okay? And that's why I've put together this ETF guide to help you grow and protect your money. from dividend growth and low volatility ETFs to international exposure and inflation hedges. This guide covers it all for you. So whether you're looking for steady income or long-term growth, these ETFs can support your retirement goals. So if you're ready to level up your portfolio, check out the full guide. Link is in the description. Growth gives your portfolio staying power. Income, like dividend stocks, gives you peace of mind. In retirement, you really do need both. So the key is finding that right balance and adjusting it over time as your needs evolve. So no, it's not just about dividend stocks, but they are an important piece of the retirement investing puzzle, just like growth stocks are. All right, thank you for watching. If you want more retirement planning tips, hit like and subscribe. That helps me grow the channel and get these retirement messages out to more people who truly need it in this market environment. Thanks again.